Are you a millennial looking to take control of your financial future? If so, you're not alone. In today's fast-paced world, navigating personal finance can be overwhelming. However, fear not. This article is here to provide you with a set of innovative personal finance hacks tailored specifically for millennials. Whether you're striving to pay off student loans, save for a dream vacation, or invest in your first home, these practical tips and tricks will empower you to make smart financial decisions and secure a stable future. So grab your avocado toast and get ready to discover the ultimate guide to mastering your money as a millennial. Understanding financial goals is a crucial aspect of managing personal finances, especially for millennials. It involves setting clear objectives for saving, investing, and budgeting to achieve long-term financial stability. By identifying short-term and long-term financial goals, individuals can prioritize their spending and make informed decisions about their money. Moreover, understanding financial goals allows for greater accountability and motivation in working towards financial independence. One key insight into understanding financial goals is the need to align them with individual values and priorities. By setting realistic and measurable targets, millennials can create a roadmap for their financial journey that reflects their unique aspirations. Another perspective to consider is the importance of reassessing and adjusting financial goals as circumstances change. This flexibility ensures that one's objectives remain relevant and achievable in different stages of life. Overall, comprehending financial goals empowers millennials to take control of their money and build a solid foundation for future wealth creation. By focusing on clarity, relevance, and adaptability in goal setting, individuals can navigate the complexities of personal finance with confidence and purpose. Budgeting and saving effectively is the cornerstone of financial stability. Many millennials struggle with this aspect of personal finance, often due to a lack of clear goals or a comprehensive plan. One key insight to consider when budgeting and saving is the 50/30/20 rule, which dictates that 50% of your income should go towards essential expenses, 30% towards discretionary spending, and 20% towards savings and debt repayment. This approach helps to strike a balance between enjoying life today and securing your future. Additionally, embracing minimalism can be an effective strategy for saving money. By focusing on needs over wants and prioritizing experiences over material possessions, millennials can reduce unnecessary spending while freeing up funds for savings. Understanding the psychology behind impulse purchases is also crucial. By recognizing the emotional triggers that lead to overspending, individuals can develop healthier habits around money management. Managing student loan debt can feel overwhelming, but it's essential to take control of your finances early on. One effective strategy is to explore income-driven repayment plans offered by the government, which can help lower your monthly payments based on your income and family size. Additionally, consider refinancing your loans through private lenders to potentially secure a lower interest rate and save money over time. Another useful approach is to allocate any extra funds towards paying off the principal balance of your student loans rather than just the interest. This can help reduce the overall cost of borrowing and shorten the repayment period. Finally, don't hesitate to seek advice from a financial advisor or counselor who specializes in student loan debt management to gain personalized insights into your specific situation. By implementing these tactics, you can proactively tackle your student loan debt and pave the way toward financial freedom. Investing in the gig economy is a smart financial move for millennials looking to diversify their income streams. With the rise of platforms like Uber, Airbnb, and Upwork, there's a plethora of opportunities to invest in different segments of the gig economy. Whether it's investing in companies that provide services to freelancers or directly funding innovative gig-based startups, there are numerous avenues for investment in this growing sector. One fresh perspective on investing in the gig economy is recognizing that it offers a way for millennials to gain exposure to emerging technologies and trends. By investing in companies that facilitate or benefit from the gig economy, individuals can align their investment portfolios with the changing landscape of work and entrepreneurship. Additionally, engaging with the gig economy as an investor allows millennials to support innovative business models while potentially reaping financial rewards. As traditional employment structures continue to evolve, investing in the gig economy becomes not only financially lucrative but also socially impactful. In today's fast-paced digital age, leveraging technology for financial management has become essential for millennials seeking to take control of their personal finances. With the plethora of budgeting apps, investment platforms, and digital banking solutions available, millennials have unprecedented access to tools that can streamline and optimize their financial management processes. One significant advantage of using technology for financial management is the ability to automate routine tasks such as bill payments, savings transfers, and investment contributions. This not only saves time but also minimizes the risk of human error in managing finances. Additionally, technology allows for real-time tracking and analysis of spending patterns, making it easier to identify areas for improvement and make informed decisions about budgeting and saving. Furthermore, leveraging technology enables millennials to access a wealth of educational resources on various aspects of personal finance. From online courses and webinars to personalized robo-advisors offering tailored investment insights, technology empowers individuals with the knowledge needed to make sound financial choices. Ultimately, by harnessing the power of technology for financial management, millennials can gain greater visibility and control over their money while laying a solid foundation for long-term financial success. Navigating credit cards and credit scores can be a daunting task for many millennials. Understanding the impact of credit card usage on credit scores is crucial. Maintaining a low credit utilization ratio and making timely payments are key to boosting one's score. Additionally, being strategic about the types of credit cards you open can also affect your score positively. Choosing cards with desirable rewards and benefits while carefully managing their usage can help build a strong financial foundation. Furthermore, monitoring your credit report regularly is essential for spotting any errors or fraudulent activity that could negatively impact your score. Utilizing tools like credit monitoring services can provide valuable insights into your financial health and protect you from potential identity theft. By staying informed and proactive in managing their credit, millennials can pave the way towards achieving their financial goals and securing a stable future. In conclusion, empowering millennials for financial success involves a multifaceted approach that goes beyond traditional money management tactics. It requires a mindset shift towards prioritizing long-term goals over instant gratification, embracing entrepreneurship and side hustles to diversify income streams, and seeking out mentorship and guidance from seasoned professionals in the financial industry. By leveraging technology to automate savings, investments, and budgeting, millennials can also free up mental space to focus on wealth-building strategies. Furthermore, cultivating a habit of continuous learning about personal finance through podcasts, books, and online resources is crucial for staying ahead in an ever-evolving financial landscape. Embracing failure as part of the learning process and being open to taking calculated risks can also lead to innovative approaches to building wealth. Ultimately, by equipping millennials with the knowledge, skills, and mindset necessary for financial success early on, we can foster a generation that is empowered to build sustainable wealth while making a positive impact on their communities and the world at large.